Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel and zinc.
LME 3-month nickel. 3 weeks ago I said about this market, and I quote, "This leaves us with an interesting if complex situation. You see, one could look at the whole of the early November to date action as a possible complex head and shoulders top with a split head. It will all now depend on whether the market first makes a move down to the proposed neckline of the pattern. That proposed neckline is currently at 27,265. I continued and highlighted in dark blue, and then what it does when it gets there. And that's the end of the quote. That was fair enough. I had seen a potential head and shoulders top, and I'd highlighted all very sound analysis. However, 2 weeks ago I took a closer look at the action from November last year to January this year, and I said the following, and I quote, "There is also another, more acute head and shoulders pattern in there as well. I've highlighted the neckline of this one in purple to help aid in viewing it. It is much more acute, and I consequently have doubts about it, but the significant feature is that the neckline has been broken on the downside, and we're currently on the pullback from that, but only so far, as the now 3-pointer downtrend generated from this smaller and more acute head and shoulders top, and that's currently at 32,880. Indeed, yesterday was the third of the 3-pointer touches of this downtrend, which I have highlighted in bright red on my daily chart. This makes for interesting viewing on what will happen for the rest of this week, so this is back then. This does not take away anything from the larger, incomplete potential head and shoulders top at this time. Thus, I'm minded to place some potential targets on the downside for this acute head and shoulders top. So a primary target X would be in the 25,080 zone, and a harder to reach secondary target X1 would be down in the 21,390 zone." End of quote. Since then, nothing much has changed, but a few things have been added. Firstly, we've seen a series of inter-day indecisive daily actions as the market has fought each day to make up its mind on whether to head lower or not. Secondly, though the early December to date downtrend has been breached, it has not been broken. And as recently as late last week's pipe top has shown the integrity of this downtrend line. Thirdly, and importantly, yesterday, the market broke down through the neckline of this head and shoulders top with a split head, the one in dark blue, closing below it for the first time. Prices halted yesterday and today ahead of the combination of the slowly rising medium moving average, currently 26,225, and the extension of the lower trend line, currently 26,110, from the old ascending triangle. Beyond this, we have the combination of the slowly declining long moving average, currently at 25,130, and the August 2011 high at 25,195. But then really nothing until we hit the congestion from October, August and July last year, and that's in the 21,325 to 22,795 zone. Obviously, we would have reached target X by now and gone a long way to target X1. Now, for the second larger head and shoulders top, I will not at this stage give any targets below, simply because we've not had any confirmation of the move below this neckline. We've only had the one close. However, I can give an idea of the size of the move. Thus, a primary move lower, below a confirmed break, will be in the order of $3,135, and a secondary harder to reach move lower would be in the order of $6,665 under a confirmed break below the neckline. Now, I said last time that there was a fly in the ointment, and there still is. You see, these head and shoulders tops are fine, but what if one or both of the head and shoulders pattern turns out to be a head and shoulders continuation pattern rather than a head and shoulders top, or even something else completely? What then? Well, I think that is a good question, as having such a pair of the same patterns at the same time may lend itself to such an outcome. The only thing I can say to that is keep a close eye on any such deviation in one or both of these patterns. LME 3-month zinc. There's a hell of a lot going on here, which just about describes all the multicolored trend lines and patterns seen here. So let's start with the key lines of support and resistance. Below and highlighted in red we have the lower time, currently at 29.05 of the big old 2015 to 2020 bullish Andrews pitchfork. We also have a congestion between 27.91 to 28.25, which includes the June 2021 low at 28.10, the July 2021 low at 29.06, and the August 2021 low at 29.17. All these had previously played their role in supporting the lower time and the market. We also have here below the middle time, currently at 28.70, which is highlighted here in purple, of the more recent late May to mid-August bearish shift pitchfork. The market previously used this time as a base to push up and over the nearby medium moving average, currently at 30.67, which is currently being tested by the market. The upper time, currently at 34.06, was tested in late January, was breached but held as resistance. Immediately above the market we have the combination of the flattish neckline, currently at 31.84, of the September to December 2022 reverse head and shoulders pattern, and the slowly rising short medium moving average, currently 31.82. We also have nearby the June 2018 high at 32.20 and a declining long moving average, currently at 32.33. The September to December last year reverse head and shoulders pattern has left us with a primary target X1 in the 35.47 area and a secondary harder to reach target X2 in the 36.95 area. Target X1 was doable in late January, but it looks far from doable right now, as the main market mover in edging prices lower overall has been the purple highlighted tines of the May to August 2022 bearish shift pitchfork. Finally, I have something on which I've spoken about a lot, is the March 2020 to June 2022 ascending expanding wedge pattern, currently 40.42 to way off the top of my daily chart. The lower trend line is highlighted in dark blue in the upper part of my daily chart. There are some outlandish potential targets for such a long dated and wide pattern. So to keep an element of realism here, I would suggest only looking at just the possible primary target X for such a pattern. And that's in the 25.45 zone below. This thing is one for the back of the diary and to be reviewed maybe once a year or so. However, as we've seen, seem to be failing the rally from the previously mentioned reverse head and shoulders, then it may highlight this longer term pattern as being more important, perhaps key.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.